Hello learners, hi, how you all? You might have seen part 1 and part 2 by now is my premise based on which I'm starting this lecture. If not, you guys can go back and then watch part 1 and part 2 to liquidation of companies, what I've done, and it's there in this very YouTube channel. And this is part 3 in which we are continuing our discussion on liquidation of companies. In the past, we have discussed how to go about and then prepare statement of affairs. In part 1, I discussed the part statement of affairs conceptually. In part 2, we saw one problem from our ICA material and then saw the solution for the same under statement of affairs. Now, in this video, we are going to start discussion on liquidator's final statement of account. So, which is a receipts and payment account prepared by the liquidator. So, before I go any further ahead in discussion of liquidator's final statement of account, I have the announcement for all of you people. This is with regard to the new CA Inter Group 1 batch starting on Unacademy from the team of Vicious Academy. In this batch, you get to learn CA Intermediate Group 1 accounts from me, CA Rajavardhan, CA Mayur Natha sir, and Ravikant Miryala sir. So the schedule for the first few months, that is July and August, will be accounts classes by Mayur sir, Ravikant sir's accounting standards, Dhananjay Bhave sir's costing, and of course Vijay Raja sir's law and taxation. So my class would come little later in the month of October, November, or yeah, maybe October, November types. So we'll be hoping to see you all in the CA Intermediate batch on Unacademy. The advantages of taking up Unacademy subscription is you all know the usual features that you get like live interactive classes and recorded backup being available, evaluated test series, and what to say quizzes at multiple intervals and doubt solving sessions. If you take up Iconic subscription, you get few add-on benefits like study material being available to you at your doorstep and one-to-one live mentorship and quite a lot more features. So what are you waiting for? Take up your Unacademy subscription today and use the code YESHAS, which is YESHAS, to avail 10% off on the price on that category. So that's with regard to the batch announcement that we're starting very soon. And there is live combat that is already over on 10th of July. Similar live combats will be happening on the Unacademy platform. So stay tuned for more updates and let's now get going with our liquidation. Shall we? Okay. Statement of affairs is done. Let's move down to liquidator's final statement of account. Statement of affairs is prepared on expected basis. However, liquidator's final statement of account is prepared on actual basis. So the first and foremost thing that you need to remember is the one who prepares it. Who is it that prepares liquidator's final statement of account? This is prepared by a person by name liquidator. So the person who prepares it is liquidator. The person who's been given the power of attorney and then entitled to have the right to sell all the assets of the company and then repay all the liabilities. This liquidator will prepare this statement on the fact of he selling all the assets and paying all the liabilities. So liquidator is entitled or liquidator is as his responsibility of selling all the assets and repaying all the liabilities. So in the process of selling the assets and repaying the liabilities, he prepares this statement, and in this statement is going to write in detail as to what price did he sell each asset for and what price is at which he paid off each liability for. And this is prepared on actual basis and not on estimation basis. Unlike statement of affairs, this is on actual basis. So in fact, we can say this liquidator's final statement of account no, is a cash book. You can call this what? This is replica of cash book. Let me write in black. Yeah, basically it is like receipts and payment account that we prepare. Got that? Fine, let's go a little ahead. So in this statement, the side on the left is our receipt side, which talks about all inflows, and the side on the right is our payment side, like the credit side, what we say. We don't usually write debit, credit, particular amount, but we can write receipt side and payment side. And the receipt side acts like our debit side of a ledger, and payment side acts like the credit side of a cash account. And in this, first and foremost, we will realize the money on sale of asset. So we'll write assets sold which are not specifically pledged. So that is, we'll write sale of ANSP. What is ANSP? Sale of assets not specifically pledged. Then we'll write sale of ASP less secured creditors, the person with the key in tagging that assets. So secure, or say sub consideration from sale of assets specifically pledged less amount paid to secured creditors, that will leave us with surplus. That surplus will be written on the receipt side here. So what do we write here? We'll write sale of assets specifically pledged minus secured creditors. After doing both of which, we'll be left with surplus on sale of assets specifically pledged. This surplus on sale of assets specifically pledged plus sale of ANSP is the money that we'll be collectively using to make all of these payments. When we start making the payments, we need to first make the payment to the person who's running around here that he wants the money, wearing the mask though. So this person has the topmost priority. In fact, he has the priority even over and above the preferential creditors. Who's it? So this is liquidator. Liquidator has the priority for two things. One, for the liquidation expenses, and number two, for his remuneration. Before paying anybody else, the money has to be paid to liquidator for the expenses that he incurred on liquidation, and secondly, for the remuneration that he is entitled to by way of appointment order. This we didn't write it in statement of affairs because statement of affairs is a statement prepared on estimation basis before the entire process of liquidation actually happens. That is given to the members, given to the creditors, everyone approves it, then that's adopted, then they go for liquidation. And in the liquidation process, after appointment of liquidator, we prepare LFSA. So at the time of preparing statement of affairs, we don't know the liquidation expense, we don't know the liquidator's remuneration, so we won't write the same. Do you get that? After we pay liquidator, then we pay preferential creditors. Preferential creditors, as I had told previously, will include three categories of people. One, government and tax authorities. Two, laborers. Three, employees. Government for their tax dues in the, let us say, for the period of last 12 months. And then laborers and employees for their dues as salaries and wages for the 4 months in the last 12 months. Beyond that, if it's there, it will become non-preferential creditors, that is unsecured. But to that extent, it is preferential creditors. So from the realization on sale of assets not specifically pledged and surplus from assets specifically pledged, we'll first pay liquidators remuneration and expenses. Then we'll pay preferential creditors. After that, we will pay debenture holders. You remember this man in suit? We'll pay debenture holders. You should be knowing this, for nominal value plus premium plus interest. After paying these debenture holders, then comes the turn of unsecured creditors. People who are who have no security against the money that they've given. Unsecured creditors. So unsecured creditors can be those creditors against who have not taken anything as guarantee, against which we have not given any encumbrance or pledging, or such preferential creditors beyond the period of 12 months when it comes to tax, or outstanding for a period longer than 4 months when it comes to employee salaries or wages. Then it will become unsecured creditors. So those unsecured creditors have to be paid. After paying unsecured creditors, then we'll pay the person who's in running mode here. Who's he? Preferential shareholders. And then finally we pay equity shareholders. Like we pay equity shareholders at any point of time before we pay preferential shareholders, or before we pay unsecured creditors, or on payment of debenture holders or preferential creditors, if the company doesn't have sufficient money and there is shortage in money, then the company can collect that money from the shareholders for the money that they have promised to pay but not paid. For example, if there is a share of rupees 10 held by an equity shareholder, against which only 4 rupees is called up, remaining 6 is uncalled, and if the company moves into liquidation, company can call for such remaining uncalled capital. So this is for uncalled capital. which will be called now. To the extent the money is not called previously, the company can make the call now so that such money can be utilized to repay preferential creditors or debenture holders or unsecured creditors. That is a plight of uncalled cap. That is a plight of liquidation holders. So such money can be called. That will be a receipt, and that's how we basically arrive at the payment. If there is shortage, it has to be borne by equity holders. If there is surplus, that will again go to equity holders. So IO Papa in the entire case is equity shareholders. So this is the format of liquidator's final statement of account. I showed it to you with lot of images. If you want to see with figures and description, let's quickly see this. Yeah, so it comes here. Let me show, and I would have to discuss a little about how to compute liquidator's remuneration. We'll do that after. So format of liquidator's final statement of account is here. Balance brought down, any cash balance which will be ANSP will come here. After that we have any bank balance which is also ANSP. Together it will become cash and bank balance brought down, because this is like a cash book. Then we have realization from assets not specifically placed. Any number of assets that is there, A and SP, we'll write them, add them to our outer column. Then we'll have assets specifically pledged. Against assets specifically pledged, I'll first write them in the inner column, deduct the secured creditors, and then the balance will be written to outer column. And with regard to the notional calls that can be made, or shareholders from whom you will make further calls and receive money, because there is shortage of funds in the process of liquidation, can be now made, and we call it call from contributories. We have little more discussion in detail about present contributories, past contributories, which we'll do in the next part of the video. In this part, all we need to see is from the shareholders we'll call and then collect money, because the money that we have right now with us from the realization of ASP and ANSP is insufficient to pay the liabilities. Got it? So then we go down and then pay our liquidation expenses, the first thing, and then we pay liquidators remuneration. After we pay liquidators remuneration, preferential creditors, debenture holders, unsecured creditors, preferential holders, and then finally equity holders. So let's see. See, we pay preferential creditors, and after that we pay liabilities with floating charge, that is our debenture holders, for their nominal value, interest till redemption date, as well as premium on redemption. Then we pay unsecured creditors, preferential shareholders after that. Finally, if anything is left, will be given to equity shareholders. So this is the format which we use to present our liquidator's final statement of account. I hope you guys understood this. And in the next video, we're going to discuss contributories. So then what are we going to discuss in this video? In this video, what we are going to discuss is we are going to understand what exactly do we mean by liquidator's remuneration, how exactly should be computed, and we'll also see an example problem on this case. Shall we, guys? Chalo, let's quickly see this part as to how do we provide for liquidation expenses and liquidator's remuneration. Liquidation expenses can be provided on two bases. One on actual basis, second one on expected basis. What do you mean by actual basis? Actual basis means as and when the liquidation expenses are incurred, it will be recorded. What is it? Recorded as and when it is incurred. As and when we incur this liquidation expenses, we're going to record it. We incurred some 10,000 rupees liquidation expense today. I'll record it today. We incurred it after a month. We'll record it after a month, meaning after sale of assets or at the time of repayment of liabilities. Whenever it is incurred, to the extent it is incurred, it will be recorded. On expected basis means we don't record it as and when we incur. We record it even before incurring. We make provision for the same. So expected basis by making provision. Yes, we record it on expected basis by making provision for the same. Now, when it comes to liquidator's remuneration, why are we giving liquidator remuneration? Because there is certain amount of efforts involved in sale of assets, and there is certain amount of efforts involved in paying liabilities. So because there are efforts involved in selling assets and paying liabilities, and liquidator is putting efforts in the same, is entitled to remuneration. Now, you can give liquidator remuneration as a fixed sum, predetermined, meaning in the beginning of the question only it will be given to us. There, at the time of appointment only, the remuneration is fixed. So this is an easy case where they'll say liquidator's remuneration 1 lakh. We'll chumma write 1 lakh rupees in payment side of liquidator's final statement of account. It is not a difficult part for us to write predetermined sum in our liquidator's final statement of account as payment. But the tricky part comes in when they give liquidator's remuneration as a percentage of some amount. They don't literally tell the amount, but they tell on what amount should we be applying this percentage. Let's quickly see on what will we be applying this percentage. Now, liquidator's remuneration is applied as a percentage of assets realized. How is it applied? Percentage of assets realized. If they just use the word assets realized, then we should compute it as a percentage of assets not specifically placed plus only surplus of ASP and not the whole of assets specifically placed. Why? Whenever they use the word percentage of assets realized, it means that liquidator is not selling all the assets. Liquidator is not selling all the assets. Liquidator is selling only assets not specifically pledged. Assets which are specifically pledged, no, they've been taken over by that secured creditor. They sell those assets. They take their portion of money and the balance money they give it to the liquidator. So here, when they use the word percentage of assets realized, this means that liquidator is not selling all the assets. Assets with specific charge are taken over by such liability holders and they are disposing that assets and they are taking care of their money that they are supposed to receive. Excess money is transferred by them to us. I'm going to say liquidator. So liquidator is entitled to remuneration only on surplus portion of ASP but not the total portion of ASP. However, if the question uses a little different language, the question uses a little different language. If the language in the question is gross assets or total assets or all assets with regard to remuneration to the liquidator. If the question says a liquidator is entitled to remuneration of 10% on gross assets, 10% on total assets or 10% on all assets, that means that liquidator is selling all the assets, whether assets specifically pledged or assets not specifically pledged. Even if there is an asset specifically pledged, if the liability holder comes and then asks for money, we won't give them the asset. We'll say, wait, I will sell the asset, I will realize the money, and I will pay you out of the money that I've realized. I am not going to give you the asset and then say, you sell the asset, you adjust your liability and pay me the surplus. So second case mein liquidator is selling all the assets, whether it is specifically pledged or it is not specifically pledged. So what we do in this case is we compute liquidator's remuneration as a percentage of assets not specifically pledged plus entire ASP and not only on surplus. Very important adjustment, important to be known because question can ask this adjustment and you wouldn't even realize that they're questioning this topic. You just blindly go by and then do it on some amount, which might or might not be wrong. So बिल्कुल रिक्सी नहीं लेने का. Don't take such risks. Yeah, remember GTA, Grand Theft Auto, if they say all assets, ANSP plus total ASP. If they don't use the word GTA, gross assets, total assets, all assets, word is not used, then what do we do? Then we compute only on the surplus of ASP. Got it, guys? Okay, next. Next comes the very tricky part. So this sounds very normal, but it's actually still tricky. I'll tell you why is it tricky. Yeah, whenever they use the word percentage of payment to secured creditors, they would say that liquidator is entitled to remuneration as a percentage of secured creditors. So what do? We compute it only on the secured creditors, no? List B. The point is we should take total of list B plus list D. List D is also secured, not by a fixed charge but a floating charge. But charge is charge. So when they say secured creditors, they don't just mean list B. It is list B plus list D. It is list B plus list D. Both together is to be the base on which we apply that percentage to compute the remuneration payable to liquidator. Got it? The next one is when they use the word unsecured creditors. When they say unsecured creditors, now they say liquidator is entitled to remuneration at 10% of unsecured creditors. We have this tendency to compute it only on the unsecured creditors, that is list E. The point is, it should not just be on list E. It should be on list C also. Preferential creditors are also unsecured creditors. It is just that they have preference over normal creditors and debenture holders for their recovery. So when they say percentage of amount paid to unsecured creditors, we have to take preferential creditors plus unsecured creditors. On that we'll apply that percentage. Got it? Then we have the later part, and that's it. Now we have covered the topic of liquidation of companies में liquidator's final statement of account. Let's quickly see a problem on the same. Shall we? One moment, the place has become super hot. Let me turn on the fan and open up the window for some fresh air. Okay, let's now see a question from our material. We'll soon be sharing another part to this liquidation of companies series, and in that video we'll be discussing contributories, A list contributories, B list contributories, who's A list, who's B list, how to go about it, how to compute, how much money to receive, all of that with one problem. Definitely with one problem we'll do. I think we can do the first one. Let me see the answer first. From the answer, let's come to question. This is the file from the fast track revision batch that I took. 59th one is B list contributors. Yes, I think 60 is little unique. We can do 61st one. Yeah, we'll do the 61st question. So this is my compilation of questions from all the past RTPs, MTPs and suggested answers. It has all the questions serially numbered. So in our chapter 1, it goes from question number 1, 2, 3, 4. If you have 10 questions in chapter 1, chapter 2 will not start with question number 1 again. It will start with question number 11 or 12, the subsequent number. So that's how it goes. It will be easier for us to communicate. And what you actually saw now, the PDF, this is my fast track revision material, what I used. 61st question is on LFSA. Let's do question number 61, BT Limited. This is not a question that I cooked up. This question is from May 2019 examination. Question number 3B from May 2019 for 10 marks is a question on liquidation. So let's quickly do question number 61 from May 2019 exam paper. Yeah, BT Limited went into voluntary liquidation. Doesn't really matter whether it is voluntary or enforced. All you're gonna do is liquidator's final statement of account. On 31st of March 2018, when their detailed balance sheet was as follows. They've given balance sheet. There is issued and subscribed capital. There are two variants of equity share capital. Shares of rupees 100, 75 paid up. Shares of rupees 100, 60 paid up. We need to compute equal amount of equated amount of shares, and then compute how much money should be paid to shareholders, how much money should be collected, should be paid to one and then receive the other and all. This would have to be adjusted using notional calls. We'll do it at the end of the problem if required. Then we have 12% preference shareholders. Great. P&L account minus is there on the liability side. So this is debit balance. This will be not an asset sold. This can't be the asset that will be sold. And then we have 12% debentures. Great. Floating charge. Then we have interest, that is outstanding on debentures, which needs to be paid along with the nominal value of debentures. And we also have creditors. Asset side, we have land and building, plant and machinery, furniture, patent, stock, trade receivable and cash and bank. So these are book values. We'll only consider their realizable values. Preference dividends are in arrears for 1 year. So there is nothing mentioned here. But on this 10 lakh rupees, 12%, that is 1 year ka dividend is still in arrears. We might have to pay that, but have they told that it's waived off? Let's see. Balance creditors are discharged subject to 5% discount. So Okay, creditors include 75,000 preferential creditors. This creditors, whatever we have here, 8 lakh 50. Out of this, 75,000 is preferential creditors. Balance of 7 lakh 75 will be normal creditors, and they're saying the normal creditors are subject to 5% discount. So we'll pay them 5% lesser than what we're supposed to pay. And assets realized values are also given. Expense on liquidation is 45. Liquidator is entitled to 3% remuneration on all assets. Note this, note this, note this. They've used the word all assets. Whenever they use the word all assets, what do? We compute liquidator's remuneration of 3% on assets not specifically pledged plus total of assets specifically pledged. Not just on surplus, but on all the assets specifically pledged. All payments were made on 30th of June 2018. Great. You are required to prepare liquidator's final statement of account as on 30th June 2018. Working note should form part of the answer. Come on, let us get started. So to start with, land and building is going to realize 24 lakh 50. Let us write 24 lakh 50 in our LFH. I'm trying to change the color of the cell that we're going to use. Been taking a lot of lectures of late on the same device. The device is fully heated up. I recorded sessions till 1 in the night, and then after that I had class in the morning. It's super hot. I'm not able to touch my laptop. It's become so hot. That's the reason you might see it processing things a little slow. I'm sorry. But I have a say hectic schedule running. Okay, so we have cash. How much cash to start with? We have cash of 75,700 to start with. So let me write that cash of 75,700 to start with. Then what do we have? We are realizing assets. Land and building will realize 24 lakh 50. Land and building 24 lakh 50. Then what do we sell? Plant and machinery for 9 lakh. So I'll write plant and machinery will fetch 9 lakh rupees. Then what do we have? Furniture will realize 2 lakh 85. Furniture will realize 2 lakh 85,000. After that, what do we have? Patents will realize 90,000. Okay, patents 90,000. Then what do we have? Stock will realize 2 lakh 80. So let me write stock to realize 2 lakh 80,000. Then we have trade receivables to realize 3 lakh 50. So let me write trade receivables to realize 3 lakh 50. If I write all of them together, my total assets realized will come to 43 lakh 20. So I have 75,700 rupees of cash, 43 lakh 20,000 of assets realized. I don't think any of these is assets specifically pledged. Is there anything? There is nothing of that sort. So they have not mentioned. Debentures have floating charge and no other liabilities with specific charge. So all the assets are ENSP only. So the significance of this word all is lost. Though they've used all assets, the significance is not there. If they had given ESP, then it would have become little tricky. But can't really expect. But you know how to do it if it comes. Okay, great guys. So first thing in the order is first liquidation expense, then liquidator's remuneration, then preferential creditors, then debenture holders, then unsecured creditors, then preferential holders, finally equity holders. Got it? Chalo, let's start. First we'll pay liquidation expense. How much is liquidation expenses? 45,000. So let us write liquidation expenses 45,000 paid. After that, what do we pay? Then liquidator is entitled to remuneration at 3% on assets realized. So total assets realized pay 3%. Obviously, you will not be paying him any remuneration on cash and bank. But though it is obvious, they mentioned in the question, except cash and bank. Meaning on cash and bank, don't give him any remuneration. Okay, let us not give him any remuneration on cash and bank. So cash and bank is 75,700. If I eliminate 75,700, what I'm left with is 43 lakh 20. On 43 lakh 20, we need to give liquidator a remuneration of 3%. So 3% of 43 lakh 20,000. How much is that? That is 1 lakh 29,600. So we pay our liquidator a remuneration of rupees 1 lakh 29,600. Then we'll pay preferential creditors. They've told that preferential creditors are 75,000. They've told here, see, preferential creditors are 75. Let us pay our preferential creditors 75,000. Then we pay debenture holders. Debentures are how much? Should I take here whatever we've done? So here so far we're done with land and building, plant and machinery, furniture, patent, stock, trade receivables, cash. Done. Khatam. So creditors may little bit done. So this 75,000 done. Yeah, now we are paying debenture holders. How much to pay to debenture holders? Debenture holders, I'm supposed to pay 10 lakh plus interest of 1 lakh 20,000 to them. So on the whole, I'm supposed to pay my debenture holders 11 lakh 20,000. So let us pay 11 lakh 20,000 to debenture holders. Have a look. Debenture holders will be entitled to 11 lakh 20,000. Got it? After 11 lakh 20,000 for debenture holders, what are we going to pay next? Next, we'll pay unsecured creditors. Unsecured creditors in the total is 8 lakh 50. Out of this 8 lakh 50, 75,000 is preferential creditors. So 8 lakh 50 total creditors, 75,000 preferential creditors. We'll eliminate 75,000 from 8 lakh 50. We'll be left with 7 lakh 75,000 rupees of preferential, say, unsecured creditors. So how much is unsecured creditors? This we're done now. Unsecured creditors. How much is it? 8 lakh 50 in the total minus 75,000 which is preferential. Balance 7 lakh 75,000 is unsecured creditors. On this 7 lakh 75,000 we apply 5% discount because it is so mentioned in the question that balance creditors are discharged subject to 5% discount. So we allowed 5% discount, and after 5% discount whatever is left only the balance is being paid to creditors. So 8 lakh 50,000 minus 75,000 is 7 lakh 75. 7 lakh 75 may 5% we don't have to pay. So either I can do into 95% or I'll do minus 5%. What I get is 7 lakh 36,250, and this is the amount that we have paid to our unsecured creditors. After this we'll pay preference shareholders. How much should we pay to preference shareholders? Preference shareholders are to be paid 10 lakh rupees. How much should they be paid? 10 lakh. So let's write preference shareholders by preference shareholders. 12% cumulative preference share capital 10 lakh. 12% cumulative preference share capital 10 lakhs. After that, what do we have? We'll now pay equity shareholders. Shall we? Yeah. Oh, preference shareholders के लिए arrears of preference dividend is also there. 1 year. So how much is it? 12% is the rate of dividend on 10 lakh rupees. So we do 10 lakh into 12%, that comes to 1 lakh 20,000. So let us do 1 lakh 20,000 of arrears of preference dividend. So that put together 11 lakh 20,000 is what we pay to our preference shareholders. After paying that, finally we'll go to pay our equity shareholders. This is balancing. Whatever money is left will be paid to our equity shareholders. Now, this equity shareholders company 11,69,850 what exists here is not just to one class of equity shareholders. There are two classes of equity shareholders here. Certain equity shares, that is 10,000 equity shares, out of rupees 100 each, 75 paid up, and 20,000 equity shares, out of rupees 100 each, 60 paid up. So there are 10,000 shareholders who paid 75 rupees per share, 20,000 shareholder who was paid 60 rupees per share. Now we can't divide this total 11,69,850 by 30,000 shares and then divide them. Why? It is not right because the amount that each shareholder has paid is not equal. So we need to equate them. So what will we do? We have 11,69,850 to be paid. Assume that I'll make notional call of 25 rupees on that 10,000 shares and notional call of 40 rupees on 20,000 shares. So I'll do 25 rupees per share into 10,000 shares, 40 rupees per share into 20,000 shares. I get that money, which is not the call that we're making. We're expecting to make that call, notional call. I will add it to my existing funds available of 11,69,850. That will leave me with the total amount of money that will be there with me. And this total money is now entitled to 30,000 shares which are fully paid up because I've assumed that I've collected money from them. Then I'll divide that entire money by 30 to arrive at the amount to be refunded. That specific amount will come no per share. That is the money that we should pay them if we call 25 rupees from them and 40 per them. So then we'll adjust against the 25 and 40 to arrive at the net amount that we can either receive or pay to that shareholder. Yeah. Now I told it orally. I'll show you the computation. So what will we do? 11,69,850 will be our starting point. To this 11,69,850, ouch. Yeah, I will add the notional call. How much is the notional call? Firstly, against these 10,000 shareholders, which are 75 paid up, you will call for the remaining 25 rupees. You will call for remaining 25 per share. So I will do 10,000 shares multiplied by 25 per share. That's 2,50,000. And on the balance 20,000 equity shares, I will do 60 per share paid up. So I will arrive at the point of 20,000 shares multiplied by 40 per share, that is 8 lakh. If I add this 8 lakh plus 2 lakh 50, 10 lakh 50 is the new cash that I have with me, which I am going to mix with my 11 lakh 16,850, together bringing the amount to 22 lakh 19,850. So this is the amount available including notional calls. You get that? So number of equity shares after notional call is all the shares are of rupees 10 each. So 10,000 shares of rupees 100 each fully paid up. Why? We made a notional call of 20. And 20,000 shares of rupees 100 each fully paid up because again we made a notional call of 40 per share. So I can say totally number of shares is 30,000. So if I divide, I'll get 74 rupees. So that is the amount that we need to pay to each shareholder back. Did you guys get this? So we need to pay them 74 rupees per share. Now, 74 is the amount payable to 10,000 shareholders of rupees 100 is 75 paid up after receiving 25 from them. So I need to collect 25 rupees from them and give them back 74. So instead of doing that, can I say net I'll give them 49 rupees, 74 minus 25. Similarly, for the 20,000 shares of rupees 100 each 60 paid up, we are supposed to pay them 74 rupees after collecting 40 rupees from them as notional call. So instead of we giving them 74, collect after collecting 40 from them, I will compute the net amount and I will straight away write 34 rupees. What is it? 34 rupees is the net amount payable to them. What is it? Amount payable to them, 34. Got that? So this is how we compute and then basically arrive at the amount. If you want, you can take a small check. Okay, 49 per share into 10,000. See, 10,000 multiplied by 49, 4 lakh 90, and here I'll do 20,000 multiplied by 34. That is 6 lakh 80,000. If I take sum of these two, I'll get the money available with me before notional calls. Oopsie doopsie. No. Something has gone wrong. Oops. Here it is 20,000. No.